Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. I want to take a look at the equity markets this morning, and the equity markets, they're struggling a little bit. Basically, the S&P and NASDAQ has slid for the last 2 weeks. Now, the S&P is looking much better. Basically, it bounced off its 50-day moving average at 2045, and it's still well above its 200-day moving average, which is 2012. But it did get rejected again at that 2100 level. And that's probably 9th or 10th time over the last year when the S&P's been trying to kind of make a decisive break through that level. So we're looking to see if we can get an oversold bounce here. Now, NASDAQ's looking a little bit worse. It fell below its 50 and 200-day moving average, and it actually closed below the last support level we thought was at 47.50. It's struggling with that level this morning, trading a little bit above it, but we'd like to see it get up above that 4800 to 4835 level. And then, of course, if it can take out its recent high of a few weeks ago at about 49.69. Now, if it doesn't hold this 47.50 level NASDAQ, we might indeed see it slide down a little bit to the 4600 level. So just a little bit of caution. Market breadth's still pretty good. So the way we're playing this market right now is we're looking for basically things that have been beaten up, perhaps where the sentiment got too negative and there's no reason for that. We're not chasing the new breakouts because, as you see, even great stock like Facebook broke out, hasn't moved pretty much from that pivot. It's doing well, it's holding up there. Same with Amazon, gapped up after earnings, it's holding its level, but it's not really moving out. And that's pretty much what we're seeing all around this market. You know, we're still seeing gold doing pretty well, which isn't that good of a sign for equities. So we'd like to see some shift. However, one sector that I do think got beaten up really badly, maybe was not warranted for some individual stocks in that, and that's specifically the biotech sector. I expect a lot of mergers and acquisitions going forward in this sector, and a lot of good stocks, sort of as they say, the baby got thrown out with the bathwater. Now, specifically, I'm talking about Gilead. Gilead Sciences, which is still going to be bringing in about $30 billion a year. However, the last earnings, the street didn't like their report and sunk it a little over 10%. So we're at these levels, these low 80 levels. You can be nibbling on Gilead, pick it up. It's a good value. The company still has a great franchise in their drug like Harvoni, their HIV drugs in the TAF regimen, and they're working a lot of other new things. And with that cash, they may possibly still acquire somebody that could send shares higher. Pretty much Celgene, also another cash cow, multiple drugs being sold right now, and another maybe 20 or so in the pipeline. So that's also a good company. Regeneron too got punished. You can Regeneron anywhere below 400. You could be picking up shares of that. Now, some of the more speculative biotech plays, Acadia Pharmaceutics, which basically got approved for its drug, the first drug to treat Parkinson's psychosis, ran up into the FDA announcement and pretty much sold off. But right around that 27, 26 area, you can buy it. And if it breaks below the 26 area, that'd be a good area to stop. But again, this drug has blockbuster potential, bringing in possibly a few billion in sales in the years going forward. Another company we're accumulating at the lower 40 levels is Biotech. That symbol is OPHT. They're developing a drug that's an adjunct for wet AMD for the existing drugs. Their drug Fovista can be used with Lucentis, Avastin, or Eylea. And that they won't get approval probably till sometime late in 2017. Their phase 3 trial should be done by the late 2016, but so far the trails look pretty good. Another company, Ligand's one of the strongest, that symbol's LGND, I'm sorry. They pretty much broke through a 114 level, ran up to about 130, came back in with the market, bounced off that 115, 116 area, anywhere between 114 and 119. That may be a good value buy right there. Anika Therapeutics, that symbol's ANIK, also right around the $44 level. Using a tight stop, you could be picking up shares of that there. And lastly, there's Medvation that rejected Sanofi's takeover target at 52.50. The stock is trading at 60. Many analysts think that it will be taken over. It might even command a price closer to 70. Now, I wouldn't chase it right now here, but let's say you got to pull back to its 20-day moving average somewhere around maybe 57, 55 level. You might want to take a stab at it there. So a lot of biotech stocks to take a look at. In summary, you know, we're not chasing the breakouts now in this market until we see some improvement. However, as mentioned, breadth is good, and you can buy some of these better biotechs on the dip. These companies are actually making money selling drugs, and I think they just got a little bit of a bad rap, and it could be compelling values at these prices. But as always, that price and volume be your guide. check with your financial advisor if any of these trades are for you, and if you decide to trade them, use a pretty close stop because, of course, the market's not out of the woods just yet. So this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.